Hello guys, in this video, we're gonna talk about the 200 SMA, which is like the 50 SMA, but in this case it's the 200 days. It keeps track of the last 200-day pricing. So we're gonna edit this one. You know what, I'm gonna remove it entirely, and then we're gonna add studies, simple moving average, and then we edit, and then we're going to put 200. We're going to change the color to this one to blue. This is our 200 SMA. Okay, now I am going to incorporate the 50. Simple moving average. We're going to edit. Then we're going to put 50. I'm going to keep this orange so we know the difference between both of them. So notice how we have the 50 here and the 200 here. Now, the moment price got above both moving average was very, very bullish. So this candle right here was a clean indicator that Home Depot was going to keep moving higher. Based on this this candle right here, this is a bullish engulfing to this one. The candle is a bullish engulfing to this smaller candle. That's one. The second clue is that it closed above the 50 and the 200 SMA. It closed above both moving average. So this right here is very bullish. Now, when you're going to take a trade, where do you take it? Above here, above this candle. Above this candle is your entry to the upside. And I had this line already here, so that could have been your first target. That could have been your first target. Now, this is the daily chart. So we have our signal here in the daily chart. Now we're going to go here. We're going to come down to the 4-hour. Let me give more time, 4-hour. So notice that our signal was given here in the 4-hour. See how price came below both moving average? This is bearish. So when you see this, just wait to see what it's going to do and see if it forms a pattern. If it forms a pattern, the pattern will tell you what's the next move. Like right here, we have a wedge. So this wedge into support, this support was a clear indicator that we are moving higher. Now, if you enter a position here, this will be an early entry. This here would be an early entry. This here would be a confirmation to the upside at the break of this wedge. This right here. Notice how this candle broke above the 50 SMA. And then if you want another confirmation, you're still not unsure because we're still under the 200 SMA, then you can just wait till it gets above the 200 SMA as well. So this right here was a really early entry. Here is a confirmation. If you need confirmation, the confirmation is around here. And then just wait for this move. Now, one thing to keep in mind is when your 200 is the last support that it would hold. That's like the sand on the line. That's like the line on the sand. That is the line on the sand is your 200 SMA. Price must stay above the 50 and the 200 SMA for it to be a bullish move. If it's under these average lines, it's a bearish move. So notice how this just ran. Home Depot just ran straight up. This has to pull back. This has to pull back. So when it does pull back, it's going to probably pull back all the way back to here, to this moving average, which is the 200. It has to pull back to the 200. The moment it closes under this 50 SMA, it will magnet to this 200. The 200 must hold. It must hold. Once it gets below the 200, then we're going to come back. The fall is going to be deeper to here. So these are ways that you can use the moving average. Look at this, the moving average as a guide. These are ways that you can use the moving average as a guide as to know where the market is. Are we in a bullish move or are we in a bearish move? Which in this case, it was bullish. Look at these average lines. This is a really nice trend right here. This is really nice. But this has to pull back. So when this pulls back, I'd expect it to come here, hold, and then continue to go higher. Moving average will tell you where the market is at, if it's in a bullish state or if it's in a bearish state. The 200 and the 50 SMA is very important to a lot of traders because that's what they use. That's what they use. Look at this right here. This is the 50 and this is the 200. Look what it's doing here. When the 50 crosses below the 200, that's considered a death cross. A death cross means that a bearish move to the downside is like it's near. When the 50 crosses below the 200, that is considered a death cross. When the 50 goes above the 200, that's a golden cross. Let's see if we can find one. For example, here, notice how the 50 came and crossed over the 200. That's a bullish move. When the 50 comes over the 200, that's considered a golden cross. A golden cross means we're about to see a move higher. When the 50 crosses below the 200, that is a bearish move. That's letting you know that a move down is nearing. A move to the downside, it's about to near. Once again, when the 50 crosses below the 200, that is considered a death cross. That is bearish. When the 50 crosses above the 200, that is a golden cross. That is bullish.